Hello folks, this is Larry Strelacki from Assured Concepts Group with an educational economic update for November 2018. In this month's video, I'll discuss some of the major headlines that influenced the markets in October, and I'll also provide you some insight into what these developments could mean for you as an investor. Now, October is often a spooky time for the markets. Historically, it's the most volatile month in the calendar year. Some of the largest crashes have occurred in October, too, including 1929 and 1987. The most significant sell-offs during the 2008 meltdown also happened in October. Now, this month's October results reflected the month's rocky reputation and certainly didn't disappoint. The S&P lost 6.9%, posting its worst monthly showing since 2011. This performance led to $1.91 trillion in losses. The Dow gave back 5.1% and the Nasdaq dropped 9.2%, its largest monthly decline in nearly a decade. Similar struggles occurred in other domestic indexes and worldwide markets. Global equities had their worst monthly performance since 2012. So what happened last month to cause these declines? Well, seasonal volatility may be partly to blame, but settling for that explanation or excuse doesn't give you much insight into what investors responded to last month. The volatility started at the beginning of the month when the Federal Reserve Chair, Jerome Powell, indicated that they will continue to keep interest rates rising for a while. But increasing rates were not the only concerns on investors' minds in October. Ongoing trade tensions, especially with China, and questions about U.S. corporate profits also affected investor sentiment. In particular, several major tech and internet companies experienced large price drops after releasing their earnings reports. These stocks can attract investors who are chasing results, so both good and bad news will drive large swings in their prices. Now, thanks to many companies' positive earning results, however, October ended with upward momentum. By the end of October, estimates had indicated that the S&P 500 companies experienced 26.3% growth during the third quarter. In fact, investors started to buy back the tech stocks that sold earlier in the month, helping to erase at least some of the U.S. index's losses. Markets closed the month of October with 2 positive days in a row. So what happens next? Well, going into November, market fluctuations or volatility could continue for a while. Questions about interest rates and the speed of their increases, the global economy remain. The midterm elections could also wind up having an effect on investor behavior. But the economy seems to be moving forward. The Federal Reserve recently said that we're in a, quote, remarkably positive, end quote, moment. Behind last month's volatility, we also learned that the economy had solid growth in the third quarter and that the labor market remains strong. As always, we'll continue to focus on the economic fundamentals rather than letting dramatic headlines sway our longer-term goals. Well, that wraps up this month's educational economic update. Please remember that nothing I talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give me a call at 847-426-1077, and I'd be happy to talk to you. Once again, this is Larry Strelacki with Assured Concepts Group, signing off for the month of November 2018.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.